So today I want to show you why our first-time homebuyers program is actually a better option than a standard conventional loan or an FHA loan. And I want to walk you through two different ways of how we can structure our first-time homebuyers program to really make purchasing a home more affordable for our clients. So I want to start off and frame this example. We're going to assume that our client has a 680 credit score, so it's not going to be extremely high and it's not going to be extremely low. We're going to come in right at that average credit score mark, and then we're going to be buying a $170,000 home. So if you look for a standard conventional 30-year fixed rate mortgage for this particular client, their interest rate would be a 6.625%. That'd make their total monthly payment, including property taxes, insurance, and PMI, $1,273 per month. Now at 5% down, their cash to close is going to be $13,824. Now let's compare that to a standard FHA loan, which is going to come in at a 6% interest rate. Our total payment is going to be $1,210 per month, and our cash to close with a 3.5% down payment is going to be $11,256. So it's going to be a slightly better option than going conventional, but our first-time home buyers program is going to be even better. So now there's three main advantages to our first-time home buyers program. The first one is a 3% minimum down payment. The second one is that our clients can get up to a $2,500 lender credit, depending on their qualifying income, with a minimum lender credit of $1,250. And then the third example, and this one's one of the biggest ones, is that there is no loan level price adjustments. So a loan level price adjustment is a fee that a lender charges either in the form of loan points or through an increased interest rate based on the client's credit score and down payment, along with a lot of other factors. So to put that in plain English, what that means is that the lower your credit score is, the higher either your closing costs are going to be or the higher your interest rate is going to be. Now, our first-time homebuyer program waives these loan level pricing adjustments, so our clients are not penalized for having a low down payment, and they're not penalized for having a lower credit score. So with our first-time homebuyers program, this is going to make purchasing a home at any price range, any down payment, any credit score way more affordable. Now, let's assume that we're going to use that $2,500 in lender credits. Let's assume that we're going to use that towards our closing costs. This is going to be column 3. So at that same $170,000 purchase price, our rate's going to go down to a 6.25% since we're waiving those loan level pricing adjustments, and that's going to make our total monthly payment $1,254 per month. Now, because we're using that $2,500 towards our closing cost, that's going to make our total cash to close $7,913. Now, this is way better than an FHA loan, and over the course of 60 months, so 5 years, we're actually going to save $4,500 compared to conventional, and we're going to save about $2,000 compared to an FHA loan. So it's a better option financially than the FHA or conventional loan. Now, there's a second way we can structure this $2,500 lender credit, and that's towards an interest rate buy down. So essentially, we're going to buy down the rate by $2,500. This is going to bring our interest rate from a 6.25 down to a 5.75, which is going to drive our payment down to a rock bottom $1,201 per month. Now, this is going to come in lower than FHA and conventional. Now, because we're not using that $2,500 towards our closing costs, our cash to close will go up, and that's going to come in at $10,391. But if you look at our savings over a 60-month period, that lower rate is going to end up paying for itself over 5 years. And compared to a conventional loan, we're saving about $6,100. And compared to an FHA loan, we're saving about $4,000 to $4,500 over the course of 60 months. So overall, no matter how you structure our first-time homebuyers program, it is always going to beat out a standard conventional loan or standard FHA loan, both upfront and in the long term. Now, the $2,500 credit gives our clients flexibility to make sure that they can qualify upfront, whether they might be low on cash or whether they need a lower payment and want to have more savings over time. That $2,500 gives them the flexibility to do that. So if you have any clients who would like to see this tailored to their personal situation, I would love to create a report similar to this for them. Or if you have any clients who are first-time homebuyers in general and you think they could take advantage of this, please reach out and let me know. I'd love to work with them. And if you have any questions on this, please let me know.